Hey guys, and welcome to today's session. Got caught off guard there. I forgot to reactivate the the session timer, so we jumped straight into the live. If somebody in the Discord could just confirm that they can hear me, and see my screen, that would be absolutely fantastic. And whilst I'm waiting for somebody to confirm that, I would just check that the stream's running correctly. Usually I do this within the 30-second countdown timer, so just bear with me for 2 seconds. Okay, it's all going fine. Okay, so if you haven't been to one of these sessions before, this is basically an in-depth view into your Darwin. Now, if you're unfamiliar with what a Darwin is, it's basically what we call our traders' strategies. So we take your trading strategy, which you trade at what we call signal account level, but it's basically on your MetaTrader account. So we take all of your trades, we risk adjust them. We have a proprietary risk engine that does all this automatically 24/7, all hours a day on every single trader on the platform, and we operate every trader at the same risk. Now, that is what the Darwin is, and it acts kind of like an investable index for the trader. So it covers all things from regulation, risk, and everything that you would need to act as a professional trader. Now, like I say, this session does go into some more advanced kind of things. We have this session on a Tuesday, which is kind of an overview into Darwinex Zero as a business. And then today's session is where we really get into the nitty gritty and go over some of the more in-depth things. So to begin, my name is Kieran and I'm head of UK growth and business development for Darwinex and Darwinex Zero. For those of you who aren't aware, Darwinex, which is our parent company or sister company, however you want to call it, Darwinex is a regulated asset manager, broker, and hedge fund. So we hold regulations in 3 separate jurisdictions. So we're regulated by the FCA in the UK, by the CNMB in Spain, and also by the FSA in the Seychelles. We have over $100 million invested on the platform. That comes from third-party capital, so from retail investors, investment houses, anybody who can open up an account. So there is a mix of retail and professional investors. And then we also have Darwinex Capital on top, running out of the Darwinex Labs hedge fund. We also have over 10,000 active strategies on the platform, and I call them strategies because, you know, some traders have multiple systems, some, have multiple Darwins, and therefore they have multiple strategies. So let's jump straight into the meat and bones of today and kind of go over what's the point in a Darwin and why every trader should have one. So the first point, which is kind of underappreciated by most, is that it's a risk-adjusted version of your trading strategy. So whilst some people may see that as a negative to begin with, you're getting a deeper understanding of your risk exposure on every level, because the risk engine doesn't look at your strategy from the same perspective that you do. It holds an unbiased mathematical approach to your exposure. So it understands risk at a very base level. Now, this allows you to offer it out to investors because we know the max risk or the max exposure that you have on any given trades, whereas we can't guarantee that a trader over a 10-year period won't ever blow up or won't ever make a bad decision or have an emotional trade. Having the proprietary risk engine there in place ensures that that will never, ever happen, or at least we minimize the damage for an investor if it does happen, if a trader does go haywire. And having that, it can teach you a lot about your strategy, a lot about yourself as a trader, and it will also allow you to operate as a professional. The same as if you worked in a professional prop desk or hedge fund, investment bank, whatever professional trading arena you went into, you would always have a third-party risk manager. Somebody outside of your strategy would monitor your risk. If your risk exposure ever got too high, of course, your risk manager is going to step in and either have a chat with you or begin to close down your trades or whatever they may do, whatever is protocol for that specific company. Now, the second point is you operate under Darwinex's regulatory compliance. Now, as I mentioned, because the Darwin is risk adjusted and because we hold it at Darwinex level and you never physically touch the investor capital that gets held in your Darwin, it comes under Darwinex's regulatory compliance. Now, as I mentioned, we hold regulatory compliance by the FCA, by the CNMB, and by the FSA, which means that for the majority of people around the world, apart from very few countries that we don't offer services to, is you can act as an asset manager using our regulatory cover and use your Darwin as that vehicle to attract investor capital. And third, last but not least, is you get a proven track record. Now, because we are regulated and because we've been around for a while, your track record with Darwinex will hold up with external companies. So if you ever wanted to apply for a job at a hedge fund, you could always show them your Darwinex track record. So you could show your broker statements, because again, we are respected, so people will trust the broker statements aren't forged or fake. You also have your Darwin as a risk adjusted track record, so that these people can see what you operate like from a risk adjusted perspective, so they understand how your system works best with the certain level of risk exposure that we allow. Now, because your strategy is risk adjusted, when you sign up, your Darwin or your Darwinex Zero dashboard won't always show the same statistics that you would see in your MetaTrader. Of course, because they're going to be different percentages. If you're risk adjusted and you're tuned higher, you're going to see a greater return. You'll also probably see a greater drawdown. If you're operating at too high of a risk exposure at signal account level, then of course, you're going to be tuned down, so your return is going to be less, and your drawdown will probably also be less than what you experience at signal account level as well. So for newer guys who come in and get confused at this, there's nothing to be concerned about. It's exactly the way it's supposed to be. In fact, there is probably a minority of sub 1% who have a value at risk of 6.5%, and therefore a risk multiplier of 1 to 1, and therefore MetaTrader statistics that match their Darwin statistics. It's extremely rare. So don't be concerned if they're different. It's supposed to be that way. So our risk engine adjusts every single trader's trade size at Darwinex and Darwinex Zero to maintain a value at risk, or what we call VAR, of around 6.5% per month across the board. So every trader is operating from the same level of risk, which is really important, because we can therefore see with giving every single trader the same limits or risk limits, we can see who can perform the best and who can make a greater return. So value at risk estimates how much money you could lose on an investment over a specific period of time under normal market conditions with a certain level of confidence. Now, I know that sounds a little bit like mumbo jumbo, so we do have an example to kind of break it down and make it a little bit more easier to understand. So if a trader has a VAR of $1,000 with a 95% confidence level over 1 month, it means that there's a 95% chance that that specific trader isn't going to lose more than $1,000 in any single month. So an investor can rest assured that they know their maximum downside on a month-by-month basis with a 95% confidence level. I'm just going to pause there for a second, because I can see we've got a question in the Discord from Cardigus. Welcome to the session, dude. I hope you're taking some value from what we're going over. Cardigus has said, I have a question. I trade the fair value gap strategy with supply and demand. I'm presuming that's what you mean by S&D. And all positions are with a large margin. They do not add. I have a capital of 100,000 US dollars. I open a position on the NASDAQ with 7 lots, stop loss 1%, TP 2%. It is always exactly the same. But if I finish the calibration and have a position like this, I can have a profit on MT5 of 20%, but Darwinex will pay me a smaller amount because the system will open a smaller position, right? So you've kind of asked a couple of questions there. The main thing is that it all depends on your risk exposure. Now, when it comes to trading with Darwinex Zero, we don't want you to make the biggest return that's possible. Like, we're not here for that. We're not here for kind of one hit quitters or one. I don't even know what the term is. We want to find people who can consistently perform month after month. I'm just going to close a trade. Bear with me. There we go. I am a trader myself, so I do often have trades going on whilst I'm on these sessions. So I have 4 screens, but at least now that I'm out of that position, I can focus solely on the presentation. So it's all about your risk exposure. Now, like I say, we want consistent traders who are trading and generating, 2% a month, 3% a month consistently over time. We don't care if you can do 20% in a week, 20% in a month. It's not of interest to us, and it's definitely not of interest to investors, because, and I don't mean this disrespectfully at all, but generally, if you can make 20% in a week, you're probably going to lose 100% in a week as well at some point. I've not ever seen a trader who can do that consistently over time, and I've analyzed thousands, in fact, probably multiple thousands of traders with track records spanning over, thousands of years. Okay, so I'm already consistently moving between 10 to 20% per month. Okay, I would be interested to see what your value at risk is, because again, I'm not trying to be disrespectful, but that would put you in the top bracket of traders globally of all time. So I would presume you're operating with quite a high value at risk, and therefore you would probably be tuned down. Yes, I'll be honest, the risk engine would probably look at that. You would be operating higher than the standard risk of the S&P, which is what I'll get onto in a moment, and therefore the risk engine will be tuning your size down. I could be wrong. You know, you could be operating with a low value at risk, but just based on the percentages that we're talking, it would seem that way to me. Now, by us adjusting the risk exposure of every single trader, it creates a level playing field, ensuring that every trader is judged based on their skill, not the amount of risk that they're willing to take as a trader, which is super, super important. And you might be asking yourself, why 6.5% value at risk? And the simple reason is that 6.5% VAR is the S&P 500's risk level, which investors are familiar with and proven to tolerate over an extended period of time. So we adjust your strategy to a risk level that ensures it meets investors' expectations and risk tolerance. We want to know that if an investor allocates capital to your strategy, that they're not just going to dip out after a week. If you go through a slight drawdown, we want to know that they're not just going to pull their funds and leave Darwinex. It doesn't benefit the investor, it doesn't benefit you as a trader, and it also doesn't benefit us at Darwinex. So we want investors to be allocated to your strategy for as long as possible. So it's really important for us that we manage investors' risk so that we keep them calm. Again, investors want 1%, 2%, 3% per month consistently. They want to outperform the S&P with less volatility in their P&L. They don't want 100% a year. They don't want 50% a year. It's great if they can get that, but they would rather have their exposure minimized and still outperform the S&P. So risk-adjusted returns is really, really what's key with Darwinex. Now you can see the Darwinex Zero dashboard here, and the return and the drawdown on this page always will show your Darwin return unless you're in the calibration phase. If you're in the calibration phase, then of course it's going to show your signal account statistics, because we don't at that point have your risk adjusted statistics at that point, because you haven't finished the calibration period. When your Darwin goes live, you see there's an option to click for signal account, which is private. It's only viewable by you, and that will change the statistics to show your signal account statistics. Again, investors won't see that. Other traders on the platform won't be able to see that either. It's only viewable to you. Now, let's take a little bit of a deeper dive into value at risk. So this is a chart called Signal Account Risk Management, and it basically measures your value at risk over time. Now, what's really important with this is it is organic and it does adjust and change over time. So based on your trading behavior, your habits, what you do, and how you trade, this will update. It has a 45-day look back period, so it will look over the previous 45 days worth of trading or 45 days worth of trades, and it will compare them to a 6-month average, make sure that you're not being under or over leveraged, and it will pump out a number. Now, we've made it nice and easy for the purpose of this presentation, and we've highlighted the 6.5% value at risk line. Now, you can see when the chart is above the 6.5% value at risk line, the risk engine is going to be tuning the strategy's position sizing down because you're operating at too high of a risk exposure. As it goes underneath 6.5%, the risk engine is going to be tuning the system up, which is really important because over time this can change, and it has a balancing mechanism with your risk multiplier. So you have your value at risk, which is this metric here, and you have your risk multiplier, and they both work in tandem. As your value at risk drops, your risk multiplier will increase, and vice versa. If your value at risk rises, your risk multiplier will decrease, so that your Darwin will always come out to the same result regardless of your value at risk. You can also see on your own Darwin, your trading account versus Darwin fair position sizes. So this shows your Darwin live trades. It shows you your risk multiplier, which I was just explaining. So you can see that in this example, the Darwin's risk multiplier is 2.32. So that would mean they're probably operating at a value at risk of maybe 3% because they're underneath a 6.5% value at risk, and therefore they're being tuned up. They have a 0% current closure rate, so the risk engine can close some of your trades or some of your trading exposure or trade exposure. It will never close 100% because whenever you're in a trade, your Darwin will also be in a trade. But what we do is we measure your average deleverage. I have some videos on deleverage, so if you want to know more about deleverage, make sure you join the Discord. There's a section called Darwinex Zero 101, and I do 1-minute bite-sized videos to explain these concepts because they are quite in-depth, they are quite complex, and sometimes it's easier to kind of get it packed into a short video so that you can listen to it a couple of times, understand it, and then move on. Now, we measure your deleverage. If it exceeds what we consider to be the average for that time period, then the risk engine can close some of your exposure to maintain that risk and to maintain the value at risk. It then shows you any trades that you're in. It shows you the lot size that you have open at Signal account level, and then it shows what the corresponding lot size would be on your Darwin. Now, what's important to note here is this will be different if your Darwin has a different level of AUM to the 100,000 or the million that you have in your Signal account. So, for example, you can see here, there's 1.2 contracts or 1.2 lots open at Signal account level, which would equate to 2.79 contracts being open at Darwin level. However, the caveat to that is that if you've got $100,000 at Signal account level and $1 million at Darwin level, it's not going to be opening 2.79 contracts. It's going to be open 27.9 because the balance is 10x. So it goes through the risk multiplier and then a balance multiplier because it's all dependent on your AUM. That's more for performance fees anyway, not for your track record. So we can see in this example, we've got two traders. We've got trader A who takes too much risk on. They trade with lot size that is too high. And we have trader B who trades with too small lot size. So they trade with little risk exposure. Now the risk engine is going to take a look at both of these traders from an unbiased perspective, and it's going to try and get them to meet in the middle. So what it will do is it will scale trader A down and it will scale trader B up, both to a 6.5% value at risk. And therefore they're both operating from the same starting point consistently. Whoever generates a better return at that point is technically the better trader. Okay, but the key thing here is that they're operating with the same level of risk. Not one trader has an unfair advantage. And the four things that comprise your VAR as a trader is number one, asset volatility. So of course, certain assets have a higher level of volatility than others. So for example, Bitcoin has a higher level of volatility than the euro dollar. Therefore, your value at risk would be higher if you trade higher volatility assets. Number two is your trade frequency. So if you're taking more positions, again, you're going to be having a higher value at risk because you have higher risk exposure or higher exposure to the market. Number three, we have trade duration. The longer you sit in a trade, the higher your VAR will be again. Now, these three kind of pale in comparison to the effect that number four has, because these are small inherent factors of your strategy, and they're very difficult to change unless you begin changing your strategy. Whereas number four, which is the key one here, is your position sizing. If you could have the lowest volatility asset, you could take one trade a year, of the lowest trade frequency, trade for 5 minutes, so you have a super short trade duration, but you could trade with 1,000 lots and you would still be above 6.5% value at risk. So number four is kind of the key variable here, and it's the one that you can change quickly. The only thing I would say is if you were looking to reduce your value at risk or increase your value at risk for whatever reason, do it gradually. Don't make any sudden changes where all of a sudden your value at risk goes from 3% to 20%, or 20% down to 3%, or your lot size goes from 10 lots to 1 lots. Do it gradually. Reduce it gradually, because like I said, remember, we have a 45-day look back period, so we will be taking into account the behavior over the past 45 days. So even if you drop it down suddenly, it's still not going to be accurate because it's going to be looking over 45 days. Now, if you do it gradually, that process becomes a lot smoother and your Darwin is a lot less affected by the change in position sizing. Now, just before we finish up for this session, I just want to let you know we do have a 10% discount running on all of our accounts. So it is valid for all subscriptions, whether it's a monthly plan, yearly plan, or a 3-yearly plan. You can use the code DWX10 for 10% off. If you do pay for the 3-year option, you also get a permanent allocation or a coupon for a permanent allocation included in that as well. So it's kind of a double whammy. You get a discount and you get, I think it's €200 towards a permanent allocation as well. And finally, we would just ask you to spread the word. If you like what we do, if you resonate with Darwinex Zero and you like how we treat our traders, then join our Discord. We're almost hit 10,000 members. I'm hoping to hit 10,000 members within the next month or two. It'd be absolutely fantastic milestone for us. There's some really, really cool guys in there, guys who treat trading seriously. You know, they look at it with a long-term vision. They see it as a career, not just a get-rich-quick scheme and trying to game the system. We do have a partner program, so we're always looking for partners to work with. So if you fit with our ethos and our ethics, and you know you also have that long-term vision and you like what Darwinex Zero do, we're always looking to partner with guys like you. So get in touch. Feel free to direct message me on Discord or reach out to us via email at info@darwinexzero.com. Every trader also has a member get member code, which means you can bring members to, or you can bring your friends, your family to become members at Darwinex Zero. And if they do, and they successfully subscribe, then we will reward you with a free month subscription. So if you bring 12 people, you're going to get a year's free subscription at Darwinex Zero. Lastly, before we finish, I just wanted to mention, I thought it was in this presentation, but apparently it's not. So I need to add that in there for next week. You can migrate from Darwinex Zero to Darwinex at any given time so that you can maintain your track record, but you can move to a live account. You would just need to get in touch with us. And what we would do is we would take your track record from Darwinex Zero. We would implement it still with the Darwin, but we would just change the Signal account from your $100,000 or $1 million virtual account to your new live brokerage account, and you can do that at any time. The only thing is you cannot migrate back, so you can't migrate from Darwinex to Darwinex Zero. But guys, it's been a quick session, but I think that's because there's less people in here than usual, so there's less questions than usual. But if you do have any questions after the session, please feel free to reach out. Like I say, the best place to reach me is in Discord. Just make sure you're messaging the right person. I have an orange name in the server and a little orange tick. Just make sure you're messaging me and not one of the 10,000 scammers or fake accounts that I have. And other than that, we'll be back with the next session on Tuesday, which will be the welcome session to Darwinex, which is kind of the overview of who we are and what we do. So have a fantastic rest of your day, Friday and weekend, and I will catch you next week. Thank you, SCX. Yeah, sounds a bit promiscuous. Peace out, guys. Have a great weekend.